Thank you. And my name is Darryl, and I'll be the moderator for today's panel entitled Strategies and Resources to Help Startups Get Funded. For a little bit of context, I am a dual degree student at the Harvard Kennedy School and MIT Sloan, year 2 of 3 of the program. And as Quinn mentioned, one of the co-founders of New Majority Capital, where we help connect underrepresented entrepreneurs to business owners who are looking to transition their business. And today we have a distinguished panel of guests, and I think we'll start off with a couple brief introductions. So let's get it started with Diane, Vanessa, and then Jane. Can you tell us your name, company title, what your company does, and then we'll get into some questions. So open it up.
Hi, I'm Diane Henry. I'm a senior venture capital investor and impact strategist at MassMutual. MassMutual has a catalyst fund, and we are absolutely determined as a mighty team of 5 to find and fund the absolute best startups run by Black founders in Massachusetts. And we're also looking for founders of any background outside of Boston in Massachusetts. So we invest from seed to Series B, and we are quite determined. So if that's you, we're really excited to talk to you today.
Excited to be here today. My name is Vanessa Cooler. I'm a vice president at Silicon Valley Bank. I sit on our new and strategic channels team, and so I always make the joke that I have one of the best jobs in the world because I just get to help founders grow and scale from seed up until an institutional Series A. So connecting them with investors, other resources. And then prior to joining the bank, I was working at a digital healthcare startup focused on operations.
Awesome.
Hi there, I'm Jane Scott from Oracle for Startups, and we're a very small and mighty team, I like that term, within Oracle, focused on getting startups using Oracle tools to help with creation, innovation, and really just supporting new ideas. And so we do that all the way from ideation to scale up. And our team focuses not just on the technology, but on business supports as well in commercialization.
Awesome. So I'm going to open it up with a couple intro questions. And Diane, this first one, in your role at MassMutual, could you give us a few examples of companies that you work with?
Sure. So one of the companies spoke earlier today, Rakeem from Our Work, if anyone was in that session, is a portfolio company that we work with closely, doing amazing work in tech products for hourly workers. And I think that we were in from seed, we went with them to Series A and beyond. And I think it's also important to point out that a lot of the startups that we back in Boston are in tech hubs. So technology tends to be really well represented in our portfolio, not exclusively. But pretty strong. And I would also say, the products that we are really keen on are doing something that creates a social impact. So in addition to advancing racial equity through better access to capital for founders of all backgrounds outside of Boston, and specifically Black founders in Massachusetts anywhere, we're really backing that earliest stage, that catalyst, first institutional money in, and getting institutional money early really changes the capital trajectory. So for companies that want to scale and go all the way and be market leaders and go IPO and all that early capital, having enough of it with the right alignment, especially impact alignment, we're finding that can make a big difference. And, it makes a big difference for us because we're certainly in it for reasons more than money, which we can all get into more later.
Awesome. Thank you. And Vanessa, I'm going to head to you right now with this question. I know that you've just recently been promoted as VP of Startup Banking for your bank. Congratulations on that.
Thank you.
New role. And just wanted to know a little bit more details on how you actually support startups in that role.
Yeah. And One of the funny things about SVB is everyone thinks that, you need to raise a huge round of VC funding to work with us, which is not the case at all for my team. So most of the companies in my portfolio actually have $0 in their bank account. And really our SVB sits at the center of the innovation economy. So not only are we banking startups, we're also banking a lot of the VC funds, the private equity funds through our private bank as well. We're also banking a lot of angel investors. And through my role, what I do is connect the founders to all the different resources that we have through the SVB community and make sure that they have the support they need. So whether it's thinking through go-to-market strategy, helping them get connected to angel investors, reviewing their pitch deck, or even taking a look at their financial model. My team's really about setting founders up for success so that they are able to unlock a lot of those milestones that happen at the Series A, which is the traditional venture debt, which SVB is known for. But right now we're focusing really on pre-Series A, more on the relationship side and how we could add value. And then specifically for underrepresented founders, we have a ton of awesome channel partners that we work with. So Diane, I'm also based in Boston as well. And so working with partners like Boston Mall Black, Boston's Black Economic Council of Massachusetts as well, to make sure that the founders who don't have access to the typical venture resources are still getting the support they need and making sure that we're leaning in there.
Awesome. Thank you, Vanessa. And Jane, I'm going to come to you now. And could you tell us more about what Oracle for Startups is and just give us more color on what your role entails?
Absolutely. So the program is one where really Oracle's investing as part of our research and development group. We actually aren't a sales group. We report into development. So the goal of the program is to have sort of a bi-directional component where we're getting our tools in the hands of founders to create and further their solutions and ideas. But at the same time, we also want to get that feedback back into our development group. There's founders and startups and solutions that are going to be pushing our technology to the very edge of corner cases. So that bi-directional part is important. And I think it was really lovely to hear some of my other panelists talk about the importance of the relationship and the business investment. So a lot of the cloud providers are focused on credits and discounts. It's quite commercial. And we have all of that. But there's such a wide range of skill sets and expertise within the startup community that really it's the business supports that make the difference. So similar types of activities, we actually have our own PR and comms team. So you would get agency level support for blogs and posts and reviewing your pitch deck and your elevator pitch. You know, one of the things we commonly do is gather a group of salespeople in a room so that founders can practice their pitch to the type of audience that they need to win over on their side to get their solution into an enterprise customer. And so they get some really real feedback. And we want to make sure that we're there to help with all of those developmental steps on that journey, in addition to the technical part.
That's awesome, Jane. I'm going to come back to you too. And just, I wonder if you could maybe prioritize what the most popular resources are. And I know you just mentioned a couple, but if there are any more that you want to talk about, and then maybe just give us a couple examples of startups
for sure
using those resources.
So I'd say, the marketing, media, communications, and content piece is probably the most popular. What our goal is to amplify our startup's message and profile on the tail of Oracle announcements. It saves money. It gets that, big audience out there. So one of the typical things we've done is each time we have a data center launch in a region, we sprinkle in the stories about our startups in those regions. So Oracle's global, the startup program is global. So our most recent data center launches were Singapore and Stockholm. And so we really focused on bringing those startup and founder stories into that communications and PR stream on top of the data center launches. And where possible, we had a startup there live to talk about their story and their experience. So that's one aspect. And then the other thing we've done is we've got a really robust program of ambassadors and mentors within Oracle. And as you can imagine, Oracle is a mature entity, but we are also on our own acquisition path. So when a founder is wondering, what do I do for staffing, nearshore, onshore, employees, contractors, that might not be in their wheelhouse, but they do need to address it. Then we've got all kinds of volunteer resources who will have that conversation in a mentoring fashion and give their experience and some suggestions. And if you can imagine that in every aspect of business, from facilities to procurement, HR, recruitment, all that is not technical, we've got those resources and a really passionate crew who will support those startups in those kinds of conversations. So that's probably the most popular resource that we see being leveraged.
Got it. And Jane, do you maybe care to share like one or two examples of a couple of companies who've actually used, in real time, just to give a little bit?
Yeah, for sure. So two of the ones that are top of mind. So one is Grid Markets, who does high definition resolution solutions using high powered compute, focused on media and entertainment and pharma. So believe it or not, this is one of the best parts of my job and our job, is you get to learn a little bit about all kinds of things that I never knew about. So hair and fire are the most difficult pieces of animation to render and take tons of skill and high-powered compute to do it in high quality. So that's where Grid Markets comes to fore. And Oracle has lots of little industry vertical specialists. So they work very closely with our media and entertainment group and have been wildly successful. And now we're looking at that for pharma high resolution imaging. And then the other one is called Heart.io, which uses the same kind of heart diagnostics immediately after pain to quickly compute and process and give a quick recommendation to the doctor on what their recommendations might be. So in time sensitive diagnoses where, it could be one of many things, they're looking at EKGs and processing really quickly and with really high definition and precision to help those physicians make the best recommendations. So those are two of the really cool examples, Grid Markets and Heart.io.
Awesome, Jane. Vanessa, I'm going to come back to you and ask, a young founder comes to SVB and asks what their funding strategy should be. What do you tell them?
Yeah, I get this question a lot, and I think it really depends on the sector and the business model, and then what the founder wants as well. So I think a lot of people say okay, I want to raise $5 million from VC funding. And I just start by asking why. VC funding isn't for everyone, and for every business model, it doesn't always make sense. And that's okay. I feel like VC and institutional funding in general has become very sexy lately. It doesn't make sense for every business model. So I think really just starting with what's the key things that are going to be really important to the founder and the founding team, whether it's growing and scaling really quickly, maybe it's keeping as much equity as possible, or maybe it's looking for strategic partners who are really going to help. That kind of helps center the conversation around what routes to take that are the best. I think, crowdfunding and angel investors are often overlooked. I think they're an amazing, amazing resource. And then I would also say another one, pitch competitions. I know so many founders who have been able to raise really quickly and actually a sizable amount of money through pitch competitions, but it's also a really good way to get feedback consistently about what you're building in the business model in a short segment of time. And then another interesting thing that I've seen founders do lately as well is I would call it an untraditional friends and family round. So, if I were to start a company today, I don't, my friends and family don't have the capacity to maybe give me $400,000 to fuel my business, but my aunt may give me $200 for Facebook ads, or, my cousin may say, okay, I'll help buy this logo or this domain. So founders actually have been keeping track of all of that and then totaling it over the year and say, well, actually, I did raise a friends and family round. So I raised a total of $10,000 throughout the year. I feel like that's a really good signal to show other investors, even though it may not be in the traditional format, there are people who are investing money into what I'm building and want to support it financially. And so I think for founders, the biggest thing to think about is what are the goals, and also do just some research on whether if what you're building makes sense for the funding model that you're trying to pursue. So if you're trying to pursue VC funding, are you building a company that's going to be able to 3x the fund and grow super, super quickly? If not, maybe that's not the path to go to. Maybe a small business loan may make more sense for you. So I would start to just really think about what are the goals and outcomes of what you want to do with the money. And then also don't discount yourself as well. All the money that you put in, even little bits over time from friends, family, and other resources, that counts as well.
Awesome, Vanessa. And just a quick follow-up too. If you want to give a quick pitch, I guess, why should an entrepreneur bank with SVB? That would be really great to hear.
Yeah, well, the best part, it's free. So there's no minimum deposit required or no monthly transaction fee. And I make the joke that my job is kind of like Mark Cuban meets Tyra Banks. We really are in it for the long term, and we want to help you grow and scale. And so how my team is actually measured on success is how many of our companies are reaching the milestones that they set out. So whether that's institutional funding, whether it's getting your first large enterprise customer, that's all we're judged on, because we know that there's going to be serial entrepreneurs, there's going to be more businesses. And so we want to make sure that we're here with you from the start. But the main thing is just the awesome ecosystem we have at SVB. We bank 70% of all venture capital firms. So we have a pretty good relationship when it comes to introductions. We have our SVB Capital arm, SVB Private Bank as well. So there's a number of different solutions that we have to get creative to make sure that we're supporting founders. And we only focus specifically on the innovation economy. So we, know how to underwrite to an enterprise SaaS company or, a consumer company, or we know how to help give a founder a mortgage if they don't have a pay stub. So this is our, bread and butter. And so I find that for founders, they feel like, oh, wow, a lot of things I had to explain, I don't have to explain with SVB.
Awesome. That's really helpful. And Diane, I'm coming back to you. It's been a couple minutes. So just curious if you could talk about MassMutual and the programs that you guys offer in terms of capital guidance and anything that you think would be pertinent to the audience.
Yeah, I want to touch on something Vanessa said, which is about whether or not institutional capital is right, and that the sort of draw of VC has really taken over the conversation in startups. And I think something that I want to highlight is that, for founders who are not, we'll say not overrepresented. So for founders who belong to so-called diverse groups or, who are not in the funding majority, one of the things that makes that question challenging is that whether or not a startup is right for venture funding, if they're not in that category, they're not getting the funding. And so it can make it even harder to figure out whether VC money is right. A founder that might be right for VC might question whether they're right for VC because they're not getting access to funding equitably. And so it's an important question. And I think I also want to point out that I was a founder. I did not take institutional money. And I know I have a very sort of intimate sense of the pros and cons on both sides. And so neither one is right. It's just which one is a right fit for what you are, what your mission is and what your outcomes are. And so I think that's a good place to touch on to Darryl's question about, what is the sort of strategic input in terms of capital strategy with MassMutual's Catalyst Fund. And I think that, for us, it's a couple things. So because we are impact, we're interested in companies that are venture backable, venture scale, but we're also interested in companies that are making an impact. They may or may not be venture scale. And so, being able to meet founders where they are is a big part of it. And so, and we're Massachusetts, for anyone who's in Massachusetts, has just a wide range of businesses and creative brilliance in all types of directions, from ad tech to health tech to fintech, the whole thing. And so I think for us, strategy comes down to what is the growth trajectory of the company based on the sort of core value proposition and product. We do a lot of work with, pricing strategy and product strategy and things like that, and then mapping that to the capital landscape in Massachusetts specifically. And I think that and then for those who are on the venture track, really making that leap from whether it's friends and family or angels or crowdfunding, making that leap to institutional funding in a way that matches what the capacity for the company is, and having very real conversations, whether or not we're a funding fit, to determine that with founders side by side with them. And, because we are a single LP, institutional fund, we don't have the sort of dynamics where, we need only 1% of our portfolio to like hit 100x in order to function, and like we can't talk to you otherwise. Like that's not, we sort of exist to serve the ecosystem and not the other way around. And so we have capacity to have these conversations with founders, and we have perspective on all these different levels and levers of the capital stack.
Got it, Diane. And just a quick follow-up. How about an entrepreneur know whether the programs that you guys are offering at MassMutual is the right fit for them?
I think you should talk to us. I think if you're a founder and you're wondering that question, we are social creatures. So, we like to meet you all. We like to talk to you all. We like to have these real talk conversations. I think that if I were to say the best way, it would be that, and we are often found in the wild at the events, speaking on the panels like today. But additionally, there's the website for the Catalyst Fund does outline sort of our investment, structure and things like that, if you want to get granular with it. And I think to the highest level thing would be, if you are a business and this is a funding matters panel, we're talking about funding. If you want funding, I think that how to know if you're a good fit for MassMutual Catalyst Fund, number one is, do you fit the criteria, which is, are you a Black founder in Massachusetts anywhere, or are you a founder of any background in Massachusetts outside of Boston? That's the first piece. And then the second piece would be, are you looking to grow considerably? Whether or not you need to do it quickly is a different story. But if you want to grow considerably beyond your current state, and you have a product that has the potential to do that, I think that's like baseline. Like if that's the situation, then I would encourage you to reach out to us. Tell us what you got. You can go through the online application, or you can email me personally, and I'll make sure myself or someone on our team actually looks at your offering. It's because at the end of the day, we're trying to grow out this ecosystem. We're not just trying to cherry pick deals for ourselves. And so we want that dialogue.
Awesome, Diane. I'm drafting the email right now. So
yay!
Yeah, look out for it.
Good.
Vanessa, coming back to you then, I know you mentioned in your last answer a couple of resources you guys offer at SVB. Could you maybe talk about a couple of companies who actually have utilized these resources? And, I think it would be great for the audience to let them know where you can find a list of these resources as well, too.
Of course. And so what I'll do is drop the link in the chat so you guys could check out our svb.com's offer page. And so we definitely have to get Jane and Diane added up there as well for additional resources for founders. One company that I think I'm really excited about is a company in my portfolio called Rebundle. And so what they're doing is they're focused on organic braiding hair. And so it's just really interesting to see how the intersects, I think, of consumer healthcare. We've seen a lot of companies focused on the healthcare sector as well. And so the nice thing is we do have a specific arm of SVB that's focused specifically on life sciences. So although that's not my personal background, I was able to introduce the team to some of our partners on the life science and healthcare side, get some conversations going with investors as well. And they've been able to get really great feedback and, friendier here, but almost finished closing their round as well. And so that's been nice to see that the introductions that we're making to founders are really meaningful and that they are resulting in actual investments. And I would say the other thing is, please feel free to reach out to me or my team on LinkedIn, whether or not, as Diane mentioned, don't self-select yourself out and say like, oh, I may not be a fit yet, because you don't know. There are companies that work with us at SVB that are consumer companies that, someone may just say, oh, how is that different than, just regular clothes or, regular food products, but they're actually raising VC funding and they're going through that model as well. So that's been really, really exciting to see. And I think especially through the pandemic, what I'm really excited about is a lot of these resources are now available to all founders, where a lot of them were very, very geo-specific before. So, if you wanted to meet with investors out on the West Coast, you had to fly out there, or, you had to physically be there. And so now a lot of stuff has moved virtual. And so I think it's just about connecting and figuring out what would be the right time to make those introductions. But I have to say that I don't think that there's someone or something that, will be limited anymore by geography or someone being in a different state. And so we're able to make those connections for all our founders. Our team is national. So I'm based in Boston, but I'm currently actually out in LA right now. So we spend a lot of time in Atlanta, DC, all different types of markets as well. So I also have seen that a lot lately, of founders saying like, okay, well, I don't live here, so I'm not going to reach out to this investor. It actually, I would say, doesn't really matter anymore.
Awesome, Vanessa. Coming back to you now, Jane, and I'm just curious if you can shed some light on challenges that startups might have when building on your platform.
Yeah, I mean, we don't typically see technical challenges. I think one of the challenges that is sort of pervasive when you're looking for being wildly successful is finding that niche that is useful, unique, but not duplicative of something else already out there. It's a really fine line, because there's lots of room for different types of solutions that might solve the same problem. So really what a lot of startups are looking for when they come to Oracle is access to our customer base. So we've got all the different applications and business solutions, and more big customers are asking for Oracle to Oracle communications. So, you've got a jump start if you're using the same technology platform as those big enterprise customers that you create on. So really the only time we cannot help access our customer base if something is an exact competitive solution to ours, but it by no means means they're not able to be in the program and there isn't a lot of value that we can bring throughout the program. We just want to make sure that, the best sort of matchmaking we can do are complementary solutions. Oracle can't do everything. We are an enterprise application vendor, which means, we pick a standard that works for the most. But that doesn't mean other industries have niche solutions or things that are just spaces we won't get in. So one of the pieces of advice we really want to emphasize with founders and startups is really do your research and do your homework, so you know what that inventory is with the vendor that you're talking to, so that you can very quickly identify what your go-to-market plan is, how you're going to do this. Is it complementary or additive, or what's the space you're in? And if you don't have that, that's okay. We'll support you and help you get there. But at least doing that homework piece so that you know where you want to target, and then we can help you be laser focused on that.
Awesome. So I'm going to maybe open it up for a little bit more of a general question, and you guys can each take this. You guys can decide if you want to pass on it, but what specific resources should entrepreneurs look for and acquire to minimize dilution for their company?
I'm going to start. The first one I think that's going to be really important is cap table management. Even if you're early, having an organized place just to show who owns what, especially as you're making hires, as you're taking on maybe small checks, I think it could get messy very quickly. So we recommend Carta. Carta is awesome for cap table management. So I would say just start by organizing and having a clear understanding. Okay, this is how much I'm starting with. So usually it's just one, or if you have a co-founder, 50-50 or 100%. But I would say that's a really good place to start. And especially as, again, with hires, especially if you're maybe giving up equity for hires, or if it's through an angel investment, making sure that that's written somewhere. I personally don't believe at the super early stages that not every single company, dependent on the sector, needs legal counsel. I think just having strong cap table management is a good solution in the meantime until you reach those milestones where you maybe do need some more sophisticated counsel. But I would say the number one thing is just having an organized place to start to have all that information.
Does SVB have any specific resources on cap table management, just as a follow-up?
Yeah, so we are a partner with Carta. So Carta is awesome. And so through SVB, you get a significant discount on your first year working with Carta as well.
Awesome.
Yeah, so I think I would echo what Vanessa said about cap table management. MMCF uses Carta. A lot of folks depend on it, so it kind of works in terms of people recognizing it as a platform as far as resources. I think in non-dilutive resources. So some companies, if you're doing things in like life sciences and things like that, you can go for grant funding. Like some companies, especially the impact space, are eligible for grant funding. I think that the dilutive factor, I think, having a baseline understanding of how these things work, like how dilution works, is a really good starting place. But I think I would also encourage thinking about the sort of opportunity cost of pursuing capital. So like if it is grant capital, like actually think about what the effort that goes into getting that grant money looks like and how that matches to other ways of getting non-dilutive capital. And the exact same thing is true for applying for institutional funding. And so like there's always a cost benefit with every type of money that comes in the door or capital that comes in the door. And I think when it comes to dilution, understanding dilution is like the free and extremely valuable resource that I would start with is taking the time to see what is really happening here. I think, founders can be cautious about, saying quotes, giving up ownership, partly because of maybe either terms are egregious. So like they're getting term sheets, but the terms are just not matching the value creation that's there. Or there might be some, sort of mystification about how that whole mechanism really works over time. And I would say that that's pervasive across the board in terms of the cap table piece. But I also think that last but not least, I think if you feel like you're giving up something, then you maybe are not working with the right capital partner. Because at the end of the day, you're not actually supposed to be giving something up. You're supposed to be trading something to create more value. So dilution can be a good thing if the pie is getting bigger. So in other words, if you're bringing on a partner that's going to make your whole size of your opportunity a level bigger, then what you're trading is actually a mutual investment. You're investing and taking on their partnership because it's going to get you from point A to point B. And not just from Series A to Series B, but it's actually going to move the needle on the value creation of your company, such that you're making a smart business decision to trade something of value for something else of value. And so I would really encourage to think about dilution in terms of that. It's not always a bad thing as long as the pie is getting bigger, but not every capital partner is going to help you make the pie bigger. That's the part that you have to use discernment for.
Awesome, Diane. And I'm going to ask probably one more general question, and feel free, and Jane, if you wanted to chime in on that, please feel free to as well. But if production folks, if you guys can help me open this up to the audience for questions after this question, I would appreciate it. So Jane, if you want to chime in for that last question, I'll give you an opportunity to. If not, I'll ask one of the last open-ended questions for the group.
Sure, I would go ahead with your question.
Okay, no problem. So I'm just wondering if, as far as biggest mistakes go, if you guys maybe can highlight. I know we talked about cap table management, but what is the biggest mistake that you see people, founders doing when they're looking to get funded, and maybe how to avoid that mistake?
Mine isn't specific to funding, but I'd say one of those big gaps that we do see is not doing your homework. So I think there's two parts to that. So one is, don't ever underestimate all the resources that are required that maybe are not actual dollars, whether that's your ecosystem, your friends and family, someone who can generate a logo for you, someone who's got an attic space you can work in. It's such a collaborative time right now in the world that I just would say, really don't underestimate who's in your corner. And just, if you ask them in a way of, what is it you think you could contribute to this? And it's more open-ended, you'll be really positively surprised, with what people will contribute. That is all part of this recipe for success. So it's sort of do the homework and really leverage your friends and contacts and resources. And I'd say another hugely underutilized asset is LinkedIn, whether it's for educating yourself, inspiration, networking, again, collaboration. There's so much out there, and people have sort of self-identified by being on there. They're naturally open to help, requests, information. So I'd say that's something that people really overlook, which can sort of impact their productivity and success.
Awesome.
I have two answers for this. One more tactical, and then the other more philosophical. So the tactical piece is, if you talk to other founders that work with the investor, like talk to the founders in their portfolio, ask them how their experience has been. They say, we're going to be a really strategic investor, really hands-on, help make introductions. Really easy to just go on to a VC's website, look at their portfolio companies, reach out to some of those other founders. You'd be surprised about some of the feedback that you hear from that. So that would be my tactical piece of advice. And then specifically, don't act like you're doing someone is doing you a favor by investing in your company, right? They're investing in your company because they see an upside. They see, something beneficial for them. For a lot of traditional VCs, they're banking on your company to make them really, really rich. And so I see a lot of founders, kind of go into the fundraising journey with, oh, I'm so lucky to get this investment. They're actually lucky to have the opportunity to be on your cap table, and you may just make them a really great profit as well. And so own that a little bit in your fundraising journey and in your attitude as well, because no one's doing you any favors. Trust me, it's all very calculated, researched, and strategic. So if you do get an investment, also know that and be okay if it doesn't feel right saying no. Maybe you do talk to some of the other portfolio companies and the investor wasn't as hands-on as they said that they were going to be, or maybe it's been months and they haven't been able to get in contact with them. So I would say really think about what it is and don't feel like, okay, we are under-resourced. Black founders aren't getting the investment that they need. Latinx female founders, but that doesn't mean you should just be taking money to just take money either. Make sure that you feel really good about it and know that it's a long-term relationship. So once the docs and everything are signed, it's really a long-term partnership and relationship. And I just want people to be thoughtful about that.
Awesome. Diane.
Yeah. I'll add a last piece to that. a little secret that might not be obvious to everyone on the call. Some of you already know this, but I would consider it to be a founder's market when it comes to capital. There are a lot of funds out there, and even though the power dynamics may not make you feel like you're on an equal playing field, the fact of the matter is that I do feel like founders have an advantage. That may change. The markets are changing and the world is changing, but at this moment, opportunity abounds, and so I think that go in willing to meet on equal terms with whoever you're meeting with. I don't care who they are. I don't care what investor they are, how fancy they are, how they're on the Midas list. None of that matters. Equal terms. And also come prepared. Know as much about how the capital stack works as your investor does, so that so that you're on equal playing field and on level footing, because you truly are. And in terms of a value standpoint, I actually think founders are more important than investors in terms of what you're delivering to your ultimate market, which is your customer. So you don't build for your customer. You don't build for your investors. You build for your customer, in my opinion. And so at the end of the day, come empowered with knowledge, come knowing the value of what you're bringing to the table, and know that the investment exists to build your company and not the other way around.
Awesome. Thank you. So we have our first audience question, and it's what's a non-investment resource your company has invested in a startup that was a huge win? So I'll open it up for any of you all to take.
I think from the Oracle perspective, one of the things we've seen lots of success with are events and conferences. I think this is going to become more important in this space post-COVID. We're all very federated. We live everywhere. There's no centralization. And so one of the things we try and do is bring startups to events with us. We cover the costs and they get to pitch their story or, participate in pitch competitions or be right on the stage with us. And they've gotten tremendous value out of that, with being able to set up their meetings and move the needle forward for themselves. So I think that's something that, with this desire for us all to get back in person and connect, going to the right events, right conferences is a good space to invest.
One other one we've done is founder wellness. It's not an easy journey. Make sure that you're taking time for yourself as well. And I know for especially a lot of solo founders, that's something that's really hard to do. So founder wellness and making sure that you're at the best you, so that you could put that energy back into your company has been gone really well. So we've done a few things with mental health, social workers as well, to make sure that the founders are the best that they are as well.
Yeah, so there's a question about the founders market. Should I take that?
Yeah, I don't know if you wanted to chime in for the last question as far as a non-investment resource your company has invested in a startup that was a huge win, or we can pivot to the next question, Diane.
I'll let you call that, Darryl.
Okay. We can pivot to the Diane. Can you explain founder market without being salesy or entitled? I guess so.
So I think I don't fully get the question, but I'll deal with the founders market part. So a founders market means that founders have an advantage. So there's a lot of capital, and there are a number of investable founders, and that amount of capital and the number of founders are creating a dynamic that founders can leverage if they choose. And so, meaning that you have options. You don't have to take the first check that's offered to you or the first term sheet that's offered to you. You can actually shop for the best possible capital match. And I think that dynamic is being driven by the fact that there's a lot of new money in venture capital. And so, that's the deal. And I think, knowing your advantages going in the door is key to any kind of, if you're entering a business relationship, it's always good to know what you have in your corner. And founders market is that's what that term means. It means that founders have certain advantages. I want to qualify that by saying that that's timing dependent. Markets are changing, and where capital is moving is changing, at the speed of light. But there are certain advantages right now in terms of that.
Awesome,
For the
Diane. And
founder.
maybe just a follow-up question from my end. I know your fund is very impact focused. Could you share what you at MassMutual believe impact means, and how does that inform your specific goals for success?
Yeah, so I think so for us, it means that the company is building something that's going to benefit, that's going to create a social benefit. So it's not just creating something that's going to have a commercial benefit, but it's also creating some value in people's lives in some way. And we have a very, I would say the UN SDG goals are a good, like, broad benchmark for, like, is this a company that's creating something that has impact value? But I would say that's the general sense of it, is like, what are you doing that's going to be of some use to someone's life and improve lives and make the world better and contribute in a social way, in addition to creating a financial opportunity for the company and for the investors.
Awesome. And what metrics do you use to measure that?
So I would say for us, we have an internal set of things that we talk to every founder about, and that I don't want to eat up too much time talking about here. But I would say that, we're looking at things like, if you're a company that's having a positive environmental impact, what is the, what are the units that you are moving to market? How much, what is the carbon footprint of that company? Things like that. If it's for financial empowerment, then who is ultimately benefiting from the product? So whose life is being made better? Is it people who are low-wage workers? Is it creating a financial opportunity for people to level up in their careers and get to a higher level of earning potential with or without a college degree? So we look for things like that. We are looking for whose life is getting better. How are you making that person's life better? What are the measurable, sort of features in your company, that the impact KPIs that are driving both the business success of the company and the social impact?
Got it. Okay, so we have another question. Go ahead.
I would just add in there, from our perspective, those values are extremely important as well. And where people can look is the UN's got a set of initiatives that highlight, I think there's 17 different values of social benefit. And so what we see is a lot of international startups really following that template and calling that out right at the top of their pitch, that this is addressing UN, line item 2 in their values. So there is that sort of consensus that there's at least a template to follow on social good, social benefit.
Awesome, Jane. And we have another question from the audience. If a founder has an innovation, what is your view about updating the founder's IP database search to increase their company's asset value?
If this is in regards to filing for a patent, I would say patents take a lot of time and a lot of energy and resources to get that patent. So really, it would be really dependent on your sector and what exactly you're building. I always ask founders to think about, why are you the best team to build what you're building right now? And why are you in the best position possible to do that? A lot of times there's a lot of different people working on different things at the same time, but you're uniquely positioned to do so. And so if you feel like that applies to you and it's not really going to slow you down, I would say sometimes the patent shouldn't always be the first priority. Maybe, finding product market fit, building a community, whatever that is. And then at a certain point, being able to then also have the supporting documentation to then file for the patent. It sometimes makes that a little bit easier.
Okay. Not sure, Diane or Jane, if you want to chime in on that one. If not, Jane, I have another question for you.
Sure.
I think it's pretty interesting. Why would someone choose Oracle over AWS or Google?
I think there's sort of we've got sort of a business focused answer and sort of the real answer. Mm-hmm. So I think our recognition of pivoting away from just the technical to the business supports and mentoring and guidance advice is something that is a differentiator, as well as our customer base. I mean, the application breadth, the industry strength, whether it's healthcare, banking, we've got both the horizontal and the verticals. So I think that's sort of the official answer. But the real answer, I think, is that we are laser focused on providing an amazing customer experience and having a personal relationship. We've invested in a global team to be able to do that for our startups. And that's the thing that startups comment on consistently, that they get great personalized service and an understanding of their business. And one thing I can share is I'm 22 years at Oracle. And in my first couple of months in this job, we got two of the nicest breakup letters I've ever seen, where two founders were winding down their businesses. It just wasn't thriving. And they took the time to write this beautiful thank you note to our team. And I just couldn't believe that someone could be in arguably one of the most difficult situations of their career, certainly, and possibly their life, knowing how founders, personal and private, or private and business, are intertwined. But they really commented that they felt supported and understood, and that the team had done everything they could, but for whatever reason, they were just making this decision. So to me, that spoke much more than any numbers of consumption or anything else that we might track. It's those really beautiful success stories and personal impact that we've had, because we would hope that person would have another startup in another year once they've had another idea and come back to us. So I think that's the real reason.
Awesome. We have another question from the audience. What's the main key to success that you would give to an entrepreneur in their first year of business?
Probably a lot of listening, like maybe going and speaking to other founders and learning from those that have had the experiences before them, in addition to just, the basics of entrepreneurialism, just not taking no for an answer, combined with, really find yourself a mentor and make sure that you're getting good perspectives on all those that have been in this situation before you. That would be my suggestions.
Diane or Vanessa?
Yeah, I'm happy to chime in here. Specifically because you said young entrepreneur in their first year of business, my advice would be also network laterally. I find, a lot of times people want to sell to those super large enterprise corporates, or, they want to go straight to the MD of, Sequoia. That's great. Oftentimes, the most helpful person to me in my role when I was an associate were other associates, were other people who were at a similar point in their journey. So I would say don't discount the people who are kind of building with you and building together, because there's really great ways that you guys could come together and be really impactful as a community, versus just, still talk to the people at the top, still, reach out to them for advice, but don't discount, your peers, because oftentimes they could be the most helpful as well.
Awesome.
I would say if you're for an early founder, I would say to a couple things. One is, it is my belief, if you're the founder of the company, that you are the company's most valuable asset. And so I think that preserving that asset in a number of ways is I think, strategic. One is, when I was a founder, I hired an assistant early, part-time student, nothing fancy, but I did hire an assistant early. And it was to give me more throughput, to give me more hours to throw at the highest value tasks. Whether or not that should be your first move, again, discernment. I know you have it because founders do. That's part of what you do. And so I would say, line up your resources, know what your resources are, including the resource of your own time and attention, and leverage as much as you can. Leverage your time as much as you can by outsourcing things that are not as high value, especially if you have, even with modest starting resources, even without outside capital, just look for ways to leverage your time. And I think that and also be unapologetically self-promoting. I think at the end of the day, you're promoting something that has value. I'm promoting something that has value. Everyone on this panel is promoting something that has value, and you are promoting something that has value. So feel entitled to take up space and promote the thing that you have that has value. That's what's actually going to bring to you more resources, more customer, more success. And so don't be shy about what you're bringing to the table, and be smart about leveraging your time and attention.
Awesome. Well, I know we're approaching time, and I just want to give you ladies a minute or so to give the audience parting shots. What you want them to take away from this hour that you spent?
I'll start. I just really appreciate being here on this panel. And one of the things that we've intentionally done with our program is ensured that there's a really low barrier to entry. It's really simple. There's no cost. It's 2 clicks. We don't want anybody filling out forms or, straining their energy and their bandwidth for something that should essentially be a positive. So we would just say, give us a try and take a look at the tools. We think everyone will be blown away, and we'd love to support you.
Echoing what Jane said, thank you again for including me in this amazing conversation, and just happy to be on the call with Diane and Jane as well. And I want to say, as we have all these conversations, listen, we know venture and tech, it's not perfect. We all see the stats, we all see the numbers. It's still gonna be a hard journey, but what I'm hopeful about is there's a lot of people here today in this call, Kinetic, the community that they've built here in general, working to change that and make that impact. And as someone who's been in the space for, I would say, almost 5 years now, I've seen a change. It's slowly coming, but I also want to acknowledge that, when we get out here and talk about these panels and all the great things that are happening in resources, we still know that it's really tough to be a founder every single day. So we see that, and we're championing you guys and want you guys to be successful. And please reach out for help if you need it. We're here, and utilize all the resources around you. And I drop the link in the chat to connect with my team one-on-one if anyone wants to afterwards.
Awesome.
Just parting words. Thank you, Kinetic. This is fantastic. I'm so excited to be here with everyone, and we're so excited to serve. And at the end of the day, we're here for you. So please use the resources that are here. We want to encourage everyone to reach out, to make connections. If we're not the right connection, to refer you to the right connection, because progress is definitely happening and change is already here, and you're all making that change. So thank you for inviting us to be part of it.
Awesome. Ladies, thank you so much for your time today.